you know exactly who your target client is. You have the systems in place to reach out to them. You have a pricing structure that's going to establish yourself as an expert and reflects the value that you're going to bring to those clients. Now you need to be able to serve them and serve them to the best of your ability. You need to expand your capacity. What does that mean? Well, hi, and welcome to the J Wells CFO Show. I'm your host, Jeremy Wells, and today I'm coming to you with a special episode, just me sitting here solo, and because I want to discuss what's been going on. So we've had a few episodes come out where we've talked to some business owners about how they're dealing with the COVID-19 crisis and how that crisis has been affecting their businesses. And we've had a few great guests come on, spend some time with us, talk to us about the effect of that on their businesses. But I really wanted to spend some time with you one-on-one and share some thoughts that I've had about this crisis and how I think some of the lessons that we can take away from this can really help you in your own business and help you in the future. So I want to discuss 5 ways to beat the next crisis. And really, these are 5 counterintuitive ways to beat the next crisis, because I see a lot of business owners saying things and doing things and making some moves. And I even see their advisors. I see other accountants. I see marketing and advertising advisors. I see consultants saying a lot of things. And we're starting to see news articles about some of the relief efforts for small business related to the Paycheck Protection Program loans, for example. We're starting to see a lot of information, a lot of ideas, a lot of opinions, a lot of reactions coming out. And I'm concerned that some of this is pointing small business owners in the wrong direction, especially for not just thinking about how they're getting through this crisis, but how they're setting themselves up to think about the next crisis. The Japanese word for crisis comprises 2 separate characters, and each of those characters has its own meaning, separate from that of the word. You may have already heard this. I saw this coming out a lot a couple months ago, but I wanted to come back to this because the Japanese word for crisis has 2 different characters that each mean something different. The first character means dangerous, and this is the part that we focus on a lot when it comes to a crisis. We focus on the danger. We focus on the hazards. We focus on what can go wrong or what is going wrong. We focus on the negative. The second character in the Japanese word for crisis, though, means opportunity. And this is what we need to start thinking about, especially for those who are planning to still be around for when the next crisis hits, because it's not a question of if, it's a question of when. If anything, those who lived through, just in my lifetime, those who lived through the end of the Soviet Union in Europe, and then 9/11 in the US, and then the real estate market crash, the financial market crash, and the Great Recession of the late 2000s, 2008, 2009, and now going into this COVID-19 crisis. The question is not if, but when. And so we have to prepare ourselves. And not just prepare ourselves for the worst parts of it, but think about the opportunities that are going to arise as a result of the next crisis. So I want to talk about 5 counterintuitive ways to beat the next crisis. And that might be a little misleading because I also think there are 5 counterintuitive ways to think about getting through the current crisis as well. So the first counterintuitive way to beat the next crisis is to understand your financial and tax status. Now, look, I'm an accountant. Of course, I have to start there. But if anything, we're seeing that not just business owners, but also the advisors that they're relying on and the resources that they're having to turn to don't understand well enough the financial and tax structures of their businesses. One of the relief efforts that's come out for helping small businesses through this crisis is the Paycheck Protection Program loan, or the PPPL. This is something that, as I'm recording this, we are now in the second round of getting these loans approved, and businesses trying to get their applications in, business owners trying to get their applications in. And we're seeing a lot of mixed information when it comes to the business owners, their advisors, and then the bankers, the loan officers at the banks that they ultimately have to deal with in order to get approved for these loans and get the funds for these loans. And then we're seeing a lot of information and a lot of ideas and opinions and reactions coming out in the media. And this is not bashing the media. This is not bashing the banking system. This is not bashing accounting. This is not bashing anyone. This is observing the things that are being reported and said and told to small business owners, just from my own experience with some of my own clients. So, for example, as the name implies, the idea behind the Paycheck Protection Program is to give funds to businesses so that they can keep paying their employees, whether the business is actually operating or not. The idea is that the business has suffered some loss of revenue due to the crisis, and in order to keep payroll running to their employees, the Paycheck Protection Program loan is designed to, based off of a calculation of how much payroll that business has run in the last 12 months to its employees, give them enough funds to make 8 weeks worth of payroll, as well as some other expenses. So in order to verify how much payroll these businesses have run, banks, which are responsible for approving these loan applications and actually dispersing these funds, the banks are requesting documents that are related to payroll reporting. One of these documents is called a Form 941. This is a document that reports every quarter, so every 3 months, how much wages, how much salaries and wages a business has paid to all of its employees, and how much payroll tax withholding it's pulled out of those salaries and wages, and therefore needs to pay over to the IRS. So this is an IRS Form 941. If you're an employee, or you run a business that doesn't have any employees and you're a sole proprietor or a partner, and so you've never had to worry about payroll, you've never seen one of these forms. And so you might be going to your bank with a Paycheck Protection Program loan application, trying to get funds, and the banker is asking you, how much payroll have you run? And we need to see the 941s in order to verify those numbers. And so there are two relatively large groups of business owners that this request has been incredibly problematic for. So the first group that is having problems with these Paycheck Protection Program loan applications are S corporation owners that haven't run payroll to themselves. This is a problem. If you have an S corporation, if you own an S corporation and you work in that S corporation, then you should be running payroll to yourself. So for example, say you're a real estate agent, or you're paid as an independent contractor. And so for tax reasons, you decide to have an LLC taxed as an S corporation. And if you don't understand what that means, that's fine. I've got other videos on that. But just for now, let's say you have an LLC taxed as an S corporation and you've never run payroll to yourself. You're going to have a problem with the Paycheck Protection Program loan application because it's going to ask for payroll reports, and you're not going to have that. Well, you might say, well, I'm self-employed, and I thought these loans were for self-employed people too. They are. Except if you're self-employed, banks are asking for a different form. It's called a Schedule C. Now, for self-employed people who don't have S corporations, who don't have C corporations, and who aren't partners in a partnership, then those individuals have what's called a sole proprietorship, which is reported on a Schedule C. And so as long as you don't have an S corporation, a partnership, or a C corporation, then you'd have a Schedule C. So S corporation owners who haven't run payroll to themselves, they don't have the payroll reports. They also don't have the Schedule C. And so they don't have anything to take to the banker to verify any of the numbers in their Paycheck Protection Program loan application. And this is problematic. This is problematic for two reasons. One, because it indicates that this S corporation owner has not been doing the critical thing you need to be doing as an S corporation owner, which is run payroll to yourself. That's problematic. And this is revealing that problem to a lot of people. It's revealing it to the business owner for sure. It's revealing it to the bank that business owner is trying to do business with. It's revealing it to that business owner's accountant, if she has one, that this is a problem. It's also problematic because S corporations have become the most popular way of structuring a business, a small business, for tax purposes. And so we have a lot of S corporation owners out there. We have a lot of S corporation owners that haven't been following the rules. They haven't been running payroll to themselves. And so what's happened is it's created a severe burden on both the banking system, those in the banks that are trying to process these loan applications and can't get the necessary documentation that they need, and they're wasting a lot of time asking for documents and reviewing applications from S corporation owners that won't have the documentation they need to move that application forward. And it's also wasting a lot of time of their accountants in having emails and phone calls to respond to where the client is asking for this information to give it to the banker so they can get these loans when the accountant can't magically produce these documents that don't exist because the business owner hasn't been following the rules. So for those of you with an S corporation, if you haven't actually run payroll to yourself and you're trying to apply for a Paycheck Protection Program loan, there's no easy way to say this. You're in trouble. You can't get that loan. It's unfortunate, but it also shows why you need to understand your financial and tax status of your business. Now, on the other hand, we have sole proprietors and partners, meaning co-owners of a partnership, a business that reports its tax information on a partnership return. It's called a Form 1065. We have sole proprietors who are filing Schedule Cs, and we have partners who are getting K1s from their Form 1065 partnership returns that are going to banks, and their businesses don't have any other employees, so there's no payroll being run in those. Sole proprietorships don't run payroll to their owners. Partnerships do not run payroll to their owners, to their partners. And so they're going to banks trying to get these Paycheck Protection Program loans, and the bankers are looking at a checklist of documents that they need from applicants, which includes payroll reporting forms like the Form 941. And these sole proprietors and partners are going to their accountants saying, my banker's telling me I need a 941. Can you give that to me? And the accountant's having to explain why there is no Form 941, because sole proprietorships don't run payroll to the owners and partnerships don't run payroll to the partners. So if there are no other employees, there is no payroll reporting done for those businesses. And that's actually okay. That's the way it should be for those businesses. So they go back to the banks, to their bankers, and say, my accountant tells me I don't have a 941, and the banker struggles with that because the banker can't check that box off on the form. So it's not just the clients, it's not just the business owners that are not understanding what's happening and are causing confusion and problems in the system because they don't fully understand and appreciate the tax structure of their businesses. The way the banks are processing and approving these loans is also causing confusion and problems. So in general, what we're seeing is that too many of us don't understand how these business structures and entities and business types and tax structures are supposed to work, both on the business owner and on the banking side of things. And this catches the accountant in the middle and puts us in a position to where we can't produce the documents being requested, which is incredibly frustrating for the clients and for the bankers and for us as well. So, in order to plan for the next crisis, have that conversation with your accountant. And if you don't have an accountant, or your accountant isn't responsive to you to have that conversation, or if you try to have that conversation and you still just don't understand, or the accountant isn't doing a good job of explaining what's happening, then get in touch. We'd be happy to have that conversation with you. I'd be happy to have that conversation with you to help you understand what your business structure is. And from that, we might even realize that you could use a different structure. You might be a sole proprietor who's missing out on the tax benefits of an S corporation. You might be an S corporation that's not in compliance because you haven't been running payroll to yourself. You might have a corporation that's been filing as a C corporation when an S corporation would make a lot more sense. And you might have a partnership where some of the partners either aren't getting along and there's not a partnership agreement in place to help with that, or the partnership might be better off if it were treated as an S corporation. These are all conversations that you should have a trusted accountant and small business advisor working with you to help you understand these structures and be able to explain the benefits and the advantages and the disadvantages of these different structures in a comparable way that makes sense to you as the business owner. You need to understand the implications of the structure of your business in order to prepare for and to beat the next crisis. The second counterintuitive way to beat the next crisis is to maintain your systems. Now, normally that wouldn't be counterintuitive advice. Normally saying to maintain the systems you have would be very straightforward advice. However, in times of crisis, people get wrapped up in all of the changes, in all of the hazards and dangers around them, and they start reflexing against those changes and against those hazards. And those reflexes are making people think that they need to change their systems. They need to adapt to the crisis. You don't want to adapt to the crisis in terms of the systems that you've been building to maintain your business as it is. So if you have a compliant, effective business, then just because a crisis is occurring around you that's challenging those systems, don't confuse the challenge on those systems from the systems not being right in the first place. If those systems were good for the good times, then those systems are the only defense you have against the bad times. So for example, some clients, some small business owners out there have been successful in getting those Paycheck Protection Program loans. Now, there's a lot of rules, and these rules are still actually developing. Even as I'm recording this, we're getting new what's called guidance, new ways of thinking about how these loans should work from official sources, from the Small Business Administration, from the IRS. Nearly every day we're getting new guidance, we're getting new regulations on how these loans work. And that level of uncertainty and amount of change with how these loans should work is causing a lot of panic, even among those who have been successful in getting those funds. And so I've seen seasoned accountants, I've seen small business owners working to create new systems as a response to receiving these Paycheck Protection Program loans, when the entire point of those loans was to help business owners maintain as close as possible their ongoing operations. So we have business owners that have built systems and put those systems into place for normal times, for normal operations. We have a crisis come in. We have relief in response to that crisis. And instead of relying on the existing systems to weather and get through that crisis, for some reason, some of these small business owners and some advisors out there are recommending that they create entirely new systems built around these relief programs, especially the Paycheck Protection Program loan. And this is bad. This is problematic. I've seen a lot of discussion coming out in news articles. I've seen a lot of opinions being shared by other accountants about how to account for the funds coming out in those Paycheck Protection Program loans. You should use the same system that you already have in place. If you have a system and it's a good system, you should use the same system that's in place that accounts for your normal operating income and expenses, even if you receive those Paycheck Protection Program loans. Let me say that one more time. If you've received Paycheck Protection Program loans, you should use your existing normal operating payroll and accounting systems to account for those funds. Now, your bank might require you to create a new bank account for the funds that you've received from that Paycheck Protection Program loan, especially if you went to a bank that you don't already have a relationship with, which has happened. A lot of the big banks, especially Chase Bank, have not handled the Paycheck Protection Program very well at all. Chase in particular, I'm going to pick on. Chase has done a really bad job of handling this program. And it's caused a lot of small business owners, some of them my clients, to go to other banks, regional credit unions, where they've had much more success in getting their application reviewed as well as funded. Something that Chase really dropped the ball on and didn't seem able to handle despite their massive size and massive capacity. And so you have these small business owners that are creating new relationships in the middle of crisis with these banks and credit unions that they've never done business with. And those banks and credit unions are requiring them to open new accounts, perfectly normal. Those funds get deposited into those new accounts. And because there's a new bank account, because there's this influx of funds, the banker, the small business owner, even some accountants out there are having trouble reconciling how these new funds and the regulations on how to use those new funds is going to work with their normal operating systems and normal accounting systems. And to me, there shouldn't be any reconciliation. There shouldn't be any problem with that. The idea of the Paycheck Protection Program loan is you use those funds to pay payroll expenses, most payroll expenses. Some don't count, some are ineligible, but you're going to use those funds to pay eligible payroll expenses along with some other eligible expenses such as rent and utilities. You should already have a system in place that accounts for those expenses. You should already have a payroll system in place. If you already have those systems in place, then why would you create a duplicate system that's going to add even more complexity, even more confusion, even more uncertainty to where that money is going and how that money is being used? If anything, you should be relying on your existing systems, assuming you have good systems in place to account for those funds. So for example, a client has a Paycheck Protection Program loan that was deposited into a new checking account at a bank that he normally hasn't done business with. So he has a new account at a new bank with these funds in it. And we had the conversation as to whether he should use this new account to run his payroll out of, that he was going to pay his employees with the funds out of this new account, when he already has a relatively sophisticated very well working payroll system in place that operates out of his normal operating bank account. And after telling me that he'd read some news articles, he wanted to switch his payroll system from relying on his normal operating account to this new account. There are a couple problems here. One, that takes some time, because usually what happens is when you want to set up a bank account to run payroll out of, the payroll processor is going to want to verify that bank account. And this process usually looks like waiting a day or two until there are some minuscule deposits and withdrawals that get made in that new account. Then you have to log on to your payroll provider's account, type in those amounts that were deposited and withdrawn from that new account, do that verification, and then wait another day to be able to actually pull funds out of that account for payroll processing. So you're talking about a process that might add an additional 3 or 4 days to being able to start using those funds for their intended purpose. And for those of you who have been keeping up with the Paycheck Protection Program loan, once those funds are deposited, you have 8 weeks from the date of deposit to use those funds up. Now, 3 or 4 days, maybe that's not so much, but when you're talking about using up half, maybe even a whole week's worth of normal business days out of an 8-week time frame, plus this was all going to happen during the period when payroll needed to be run so that those employees could get paid. So you're going to delay payroll, and you're going to delay the use of those funds within a specified time frame because you felt like you needed to change that system that's been in place and that's been working for a while now. So after some conversations, after some explaining, and after some communication, the client agreed that a better way of doing this would be to keep the normal payroll processing system in place and reimburse the normal operating account with those funds. Now, this is going to add a little bit of extra work to being able to prove that those funds were used for the right reason, right? Because now we need to show that how much should have been pulled out of the operating account, how much of that is eligible, and then how much of that was reimbursed with those Paycheck Protection Program loan funds. But that's one step of proving that connection, as opposed to the steps, the multiple steps, and the multiple days that would be involved in reestablishing that system based on this new account, which, by the way, that new account would become depleted once those funds run out, and we would have to switch the system back to the original account. Maintain your systems. If you're lucky enough to get some of this relief, don't use that as an excuse to question the systems you, your accountant, your small business advisor have been building to help you run an effective business. Maintain your systems. If you don't have good systems in place, if you're not sure about your systems, your accounting system, your payroll system, your compliance system, if you're unsure about those, get in touch. We can have a conversation about that. If you don't have a system at all, okay, then definitely get one. Definitely talk to an accountant about putting a system in place, because having those systems in place for the good times is going to be your strongest defense against the bad times. The third counterintuitive way to beat the next crisis is going to be to niche down on your service offering. Now, whether you say it niche or niche, you know what I'm saying. Niche down on your service offering. Get more specific. Identify your target client. And when you think you've identified your target client, get even more specific. Be as specific as possible on the niche that you want to serve. Now, why is this counterintuitive? Because right now, in the economic crunch that's the result of this COVID-19 crisis, It might seem like you would need to widen the net you're casting in terms of finding new business opportunities, new customers and clients, new sources of revenue. The further down you niche, the more specific you get about your target client, your target customer, the more of an expert you become in that group's needs, the more trusted of an advisor you become within that group, and the more valuable you become to that group. When you're a jack of all trades, you're a master of none. And when you're trying to serve a wide but shallow group of clients and customers, where you're not developing an expertise in any one particular group, you're not becoming a known, trusted advisor for any one group, it's going to be very difficult to command the authority and the trust that you're going to need to rely on during these crises. You're going to leave your clients and customers in a position where they feel like they're going to need to do more of the work themselves because they don't automatically connect you and your expertise and your relevance with the issues they're facing resulting from the crisis. So if you're a consultant, if you're an advisor, right, who are you consulting? Specifically, what group? And how is that group being affected by what's going on? And how are you going to consult them on getting through this crisis? Because you're not consulting with them just for the good times. You're also consulting them on how to get through the bad times, the lean times, the crises. The better you know and understand that industry, the better you know and understand your client's specific needs, the more able you'll be to help them get through these rough times, the more likely they are to see you as their trusted advisor during these times. Don't cast a wider net. Resist that urge. Niche down. Be even more specific about the group you want to help. And in so doing, you become more valuable to that group. And that takes me to the fourth counterintuitive way that you can plan for the next crisis, which is to increase your prices. I've done a couple of episodes before where we talked about pricing. I've got a 2-part series on that where we talk about your pricing strategy and how that relates to your value proposition. And in general, you need to increase your prices, both during good times, maybe not so much during a crisis, but even during a crisis, you seriously need to consider your pricing. And not just in terms of reducing prices to try to maintain relationships or keep relationships or get more relationships in the door. You need to be focusing on your pricing in an upward direction. This is counterintuitive. Again, it seems like in the middle of a crisis, especially one with economic implications, we need to be casting a wider net. We need to be making it easier for people to do business with us. And the assumption there is that reducing prices will make it easier to do business with us. We have to resist that urge to reduce prices. Those who are going to spend in the middle of an economic crisis, we're going to spend anyway, regardless of how you change your prices. In the middle of an economic crisis, the people who stop spending are going to stop spending regardless of how much you charge. And the people who are going to spend, the people who are going to seek your advice and your consultation, the people who need your product or your service, the people who need to do business with you, they're going to do business with you regardless. If anything, your prices need to stay the same, if not increase during these times. Now, I'm not advocating price gouging. I'm not saying to double and triple and 10x your prices in the middle of a crisis and use that as an excuse to rob people. What I am saying is that your prices reflect not your desire to help people, but your ability to, your competency level, the value that you can bring those people that are going to do business with you. And when you think about pricing as a reflection, not of your desire to help, but rather your ability to help, your competency in helping them, the value that your help is going to bring to those clients, you have no way of thinking about your pricing other than realizing that they need to at least stay the same, if not go up during this crisis. Resist the urge to have a clearance sale. Resist the urge to drop your prices. Resist the urge to open your door to anyone and everyone with a few bucks. Because those with a few bucks, they already weren't going to buy from you. Those that need you, those that are going to spend with you, recognize the value of the service that you can provide. And you have to help them make that recognition by demanding prices relative to the value that you can provide them and relative to the expertise that you have in their industry, in their sector, in their area, what their needs are, how you can help them. Reducing your prices signals a reduction in the value of the work you're doing. It's another way to think about it. Why do things hit the clearance rack? Why do stores have blowout sales? Why do we get coupons for products that have been sitting on the shelves at the stores forever? Because nobody wants them. Don't undervalue your work that is necessary for that target client that you're trying to serve by reducing your prices. And then finally, decreasing your prices is only going to decrease your revenue. In a time where it's already difficult enough to focus on the problems that we're facing, that those around us are facing, the last thing you need to do is make it even more difficult for you to focus because your top line is shrinking. And that's putting the squeeze on your business, which is putting the squeeze on you personally. And it's making it more difficult for you to focus on the problems that your existing customers and clients have. Reducing your prices will only make it harder to help those you're trying to help. It's incredibly counterintuitive, but it's true. Don't undervalue the work you're doing. Don't undervalue the ability to help and bring value to your customers and clients by reducing your prices. If anything, you should be keeping them, if not increasing them. And the fifth counterintuitive way to beat the next crisis is to expand your capacity. So you know exactly who your target client is. You have the systems in place to reach out to them. You have a pricing structure that's going to establish yourself as an expert and reflects the value that you're going to bring to those clients. Now you need to be able to serve them and serve them to the best of your ability. You need to expand your capacity. What does that mean? Well, what makes it easier for you to bring on a new client or serve a new customer? Is it hiring new people? Is it investing in equipment or software? Is it taking some time off to refresh so that when you come into work the next day, you're able to focus and have some empathy for your customers and clients and think about them for a while instead of being focused on your own issues? Whatever you need to do to expand your capacity to serve your customers and clients, you have to do that. You have to take time for yourself. You have to be able to delegate work out to your staff or to contractors. And you have to have the systems and software and equipment in place to do the work that your customers and clients are asking you to do. I struggled with this over the last couple months. I'm still struggling with this, right, within my own accounting firm, because this crisis hit right in the middle of our peak season. We call it tax season, right? From January through normally April, but this year July, because of the postponement of the personal income tax filing deadline from April 15th to July 15th. But normally January through April is our busiest time of the year. And so we work very long hours, very long weeks for about 10 weeks, from middle of January to middle of April. And the rest of the year we stay busy, but that period in particular is incredibly busy. And this crisis lined up right with tax season. And so normally when I would be running my firm as a tax firm trying to get tax returns done for people, I also, because a lot of my clients are small business owners, I'm also dealing with the fallout of my small business clients who are losing business, trying to get access to these SBA relief programs, such as the Paycheck Protection Loan. And my capacity was stretched thin, incredibly thin, because I was spending a lot of time that I would have normally been doing tax returns, focusing on communicating and trying to help clients navigate these relief programs, strategize how they were going to get through these crises. And it's necessary work, and I'm glad I did it. But it also made the tax work that my firm also needs to be doing, made it virtually impossible to focus on that for several weeks, about 3 weeks. Now think about spending 30% of your busy season, right? Whatever your industry is, imagine spending 30% of that not being able to actually focus on the normal work that you'd be doing during that busy season. And that's what happened this year. And it proved to me that in order to prepare for the next crisis, I have to add the capacity to my firm, not just to manage the normal load of work during the normal time, but to be able to do even more work than normal during the busiest time. And that's the level of capacity that you need to have within your own business. Because that above normal work, that above average work, that crisis work, that is the true high value work. That is when you prove to your clients and customers that are within your specific niche and that you are pricing your services to relative to the value that you're going to bring them. That crisis time is when you're going to be doing the highest value work that you can possibly be doing for them. And it's not the time to be bogged down, even with the normal busy work that you would have during a busy season. Which is why for about 3 weeks, I was fine focusing on that high value work, those high value needs of the clients that were trying to get through and still are trying to get through this period. But you have to have the capacity to be able to get through those crisis periods. And you have to have that capacity going into it, because you can't create that capacity once it's on you. It's too late then. So, 5 counterintuitive ways to beat the next crisis. Understand your financial and tax status. Know what your business is, what the structure of your business is, and how that structure relates to how it's taxed, to how you're going to present financial information to bankers and lenders and investors. Maintain your systems. Have good systems in place that you trust. Maintain them in good times. Maintain them in rough times. Niche down on your service offering. Have a specific target customer or client and get even more specific. Be the trusted expert advisor your target client or customer needs during a crisis. Increase your prices. Set yourself up with the value both to the customer or client and to your top line that you should expect given the value you're going to bring to them, given the expertise that you have. Don't reduce the value of your work. Don't signal the reduction of the value of your work by reducing your prices. And don't reduce your ability to generate revenue to stay focused on your clients and your customers. And finally, expand your capacity to be able to serve them, not just during good times, but during rough times too. Nothing is for certain, especially during a crisis. After all, a crisis is half dangerous, but remember, it's only half dangerous. Back to the Japanese word for crisis. Two characters, dangerous and opportunity. A crisis is half dangerous, but it's also half opportunity. Which half are you going to focus on? I'm Jeremy Wells with J Wells CFO. You can find me at J Wells CFO across all the social media. I hope you're staying safe. I hope you, your colleagues, your neighbors, your family, your friends, your employees, if you have them, are all safe and well. If you are struggling with your business, if you are struggling with maintaining your systems, if you're struggling with how to serve those who are depending on you during this time, please get in touch. Thank you for watching.